Thank you. And I actually think that the bar for accessing the capital will be getting higher and higher. I actually think that a number of companies are sort of benefiting from initiatives like the DARES World Bank initiative that's supporting solar mini grid access. So if 30 different companies are benefiting from that, and then they want to all grow at the same time and scale and do more of it. There may not be enough to fund all of them to the scale they all want to go. So I actually think that the bar will be getting higher. Um, Now that means companies need to be even better organized, and I'll just hit on some of these points. The typical sort of private company operating almost anywhere, their financials are usually older, right? They haven't completed their latest audit, they haven't filed it with the Corporate Affairs Commission. Maybe they're not using a top auditor; they're using a third-tier auditor. Maybe they don't have any independent direction. So these are all the things that we help clients do to shape themselves to be ready to access sustainable capital and long-term debt finance. Make sure they appoint independent directors. Make sure that their board committees function. Make sure that they're all PenCom compliant. If you haven't paid your pensions up to date, no pension fund's going to buy your debt, even with an InfraCredit guarantee. So those are things we're already helping clients with. And it's an acceptable bar to know that, okay, we're going to help you, we're going to guide you. On the project side, maybe you haven't done your EIA yet, but we can guide you that, hey, you're going to need to have that before we can bring you to the financing community. But 2 or 3 years from now, those may just be things that we say, well, you haven't done your EIA, I can't help you. You have not, you're not using a tier one or tier two auditor. I'm not going to be able to help. So the standards may be rising as more and more companies become more sophisticated and able to access these funds directly without necessarily needing the guidance of an NSIA or an InfraCredit. So it's just how it's going to evolve. The other piece I would say is the first wave of companies accessing this capital, we all have an interest in making sure that the impact story is solid. If capital comes in and we aren't finishing the projects, we aren't able to articulate how many people were connected to electricity, how many people got access to water, then there's not going to be follow-on investment to support our financing environment. So these are some of the things that we all have an interest in making sure succeed, so that we can attract more capital. Thank you.
Thank you. Sorry, just and maybe I will also ask this from where you sit. Do you think the companies that you've come across, do you think they're more prepared? And maybe you want to. There's so many requirements that you've shared already around governance and documentation. Which one do you think stands out the most from your experience? And this can also go to all the other speakers as you share. But maybe Daniel,
Yeah.
you could just add that.
Okay. I mean, I would say there's a growing interest in accessing sustainable capital, growing interest in borrowing from the Nigerian debt capital market as opposed to commercial banks being the default source of debt. But I wouldn't necessarily say that most companies are more ready than they were 4 or 5 years ago. So we still are guiding them through. I mean, even on our onboarding documents, at the top of the first page of our checklist is your pension compliance number, because we're trying to set from day one that if you're not paying pensions up to date, that probably means your taxes aren't up to date. That probably means your financial filings aren't up to date. And it's going to be a much longer road for you to get compliant and demonstrate that you have a compliance culture, because you can't go to the debt capital market, file with the Securities and Exchange Commission, go get a credit rating from one of the major rating agencies. It's just not going to go well unless you establish from day one that you're compliant, that your corporate governance is up to par. Now I will say there are more companies accessing commercial paper, so that's a good sign. that there is a wave of companies going out issuing commercial paper. To do that, they have to go get a credit rating. They have to file with the FMDQ or the main debt exchange here. So that is a good sign, because those same companies are then already readying themselves to go and issue longer tenor debt. But I wouldn't say it's a huge wave, right? If I look at the CP market, as much as it's growing, there's maybe 8 companies that stand out and say, okay, those are guys that are already moving on the line. A lot of the projects that still come to us, we have to give them a lot of guidance. So thank you.
Thank you for sharing. Samuel, you want to share your thoughts before Abraham?
Sure. I think in general, so looking at the prospects and the outlook for sustainable bonds in general and in Africa in particular, and including in Nigeria. So while developed markets dominate, as I mentioned in my preliminary remarks, there is actually a positive momentum for Africa overall, and in many countries. There have been some encouraging developments and signals regarding this path. And you mentioned in the introduction the sovereign label bond issuances. There are many sort of initiatives that we are seeing that could catalyze additional market activities. At the level of multilateral development banks and DFIs, there are a number of platforms and products that have been designed to specifically attract institutional investors on commercial terms. We at PIMCO have been directly involved in helping building this bridge. So that includes through the World Bank's Private Sector Investment Lab, which has helped shape the bank's expanded guarantees program. That includes also through certain securitization sort of market innovation that have taken place, also to allow asset managers to participate in emerging markets activities. That includes the GISD Alliance, where we have co-led the new blended finance work stream, and also the UNGC CFO coalition, which is closely connected to this discussion, but has published a CFO guide for sustainable bonds that demonstrates the strong buy-side investor demand and benefits for investors and issuers associated with sustainable bonds. And what this means for Nigerian issuers specifically is that some of the gaps and opportunities in practice to move in this direction tend to be related to, I think, some comments that were previously made about the sort of governance and disclosure and the establishment of a strategy with accountability, the supply of data that are aligned with recognized international frameworks. What I would like to point out here is that it doesn't have to be comprehensive from day one. What matters is the direction of travel, and that on a best effort basis, issuers are moving in this direction and providing some of these important figures to illustrate the actual sustainability initiatives and the extent to which they are being supported by the company's business plan and financial strategy. And there are also more opportunities of engagement with investors, with institutional investors that can provide feedback to issuers that are interested in moving in this direction. So these are all, I think, indications of the room for optimism as it relates to the development, the additional development of sustainable finance in Nigeria and more broadly in Africa.
Thank you, Samuel. Abraham.
Okay, thank you. Maybe I should just take a stab at the questions on the chat box. I know somebody's asking, how does government balance the priorities? I think you see what the government has been doing, particularly in the last 3 years. One, you see the PCNG initiative, you see both trucks, almost all the trucks you see on the road now are now gas-fired. So that is a clear diesel displacement. So you see there's a transition towards reducing carbon emission. And then you see the direction of electric mobility. If you go to Lagos now, you have options of taking electric cars, right? And even from government point of view, if you're in Abuja, you can take an electric bus from the airport into town, and these are government initiatives. So just to tell you that, yes, government is progressively mixing carbon reducing strategy into all their policies and even in terms of the action. And progressively, you see that reflected in the budget. And then speaking about, do you want an appointment with NSIA and InfraCredits? I think that's easy. Just go on our website to send an email. But I think to Daniel's point earlier, there are over, based on the last statistics I remember, there are over 40 million businesses in Nigeria. How much meetings can we take? So, and that's just a reality. And going to what Daniel said, you need to structure your business. And it is not about even raising capital, it's about designing governance, designing reporting framework, designing structured process and policies and procedures to assure you of your own sustainability. So it's not even talking to investor that is driving it. It is your own habit within your own institution from a sustainability point of view. Now, if you have done that, it makes the conversation very easy. So if I'm going to ask around the table, how many of you have your 5-year audited financial statement right now, including full year 2025? How many can produce a Q1 management account? These are disciplines within the company that you don't need an investor to point you at, right? So not because you can't have as many meetings as possible, but it makes the conversation sweet when you come ready. And that's why you see the investors always have minimal bandwidth of how many people they can talk to or meet with, right? So that will be my counsel, like Daniel said, because when we are doing, even the rating agencies, they will look at the concentration of your shareholders. Are you the only one that owns it 100%? It means that you're going to run with our money, right? So that is something you need to do within your company. Who are the people preparing your accounts? Like Daniel said, if it is not the big four most times, we get a bit more skeptical, right? Because we start asking if it is Abraham and co. How sure am I that you have not bullied Abraham to help you write the numbers? And just to shock you, when we do our own financial analysis, we will know you are lying, right? So these are things you need to take back into, go and check your governance, your shareholding. Do you have a board? Do you meet every quarter? Nigeria has a code of corporate governance. If I ask you for the minutes of all your board meetings in the last 3 years, can you produce it? These are the foundational building blocks. So, and you see, it's not about financing. Sustainability is embedded in your practices. So when you come to NSIA, it's not even just we are looking at you, ESG and ranking and doing our checklist and all and due diligence. We review our own commitments as an institution every time. I heard today the world, is it tomorrow is World Earth Day? Is that correct?
Tomorrow, World Environment.
Yes, tomorrow. So they've sent us emails today. There are things we need to do to align with World Health Day. So you see, and just to also let you know, some of the partners we work with, I remember one of the institutions, they did due diligence on us for 3 years. So you see, it doesn't only apply to you trying to raise money from a financier. Even the investors themselves are subject to a lot of scrutiny in terms of ESG compliance. I was with the DFI yesterday. We already see changes that we need to make to align with certain global standards, which is always evolving. So what I want you to take back today is that behavioral restructuring within the entity, not just about capital raising, but from your own sustainability point of view.